In the last episode, I made the case that the mortgage industry isn't broken, it's being rebuilt. We all hear a lot about AI as a tool, something you need to add to workflow. This conversation is about what happens when AI stops being a tool and becomes the workflow. Joining me today is Troy Kennedy, CEO of Loanworks. Troy, good to have you here, friend.
Well, it's great to be with you, David. Always such a pleasure.
Troy, this isn't about features or future promises. It's about operating decisions. What had to change when intelligence moved from the edges into the infrastructure? Before we talk about AI at all, let's start here. What problem were you actually trying to solve at the operating model level, not the technology level?
That's an important question because the problem was never speed. What we were trying to solve was coordination inside an operating model that had quietly become mismatched to modern lending. Over time, the industry added complexity, more programs, more rules, more handoffs, but the underlying workflows stayed largely the same. Departments became siloed, capacity restraints collided with all the competing priorities, pathways through a loan stopped being consistent, so humans became the operating system. They were remembering rules, product guidelines, company policy, role boundaries, even communication protocols. They were tracking status across disconnected systems. They were orchestrating handoffs manually. So that led to what we all know, endless pipeline reports, alignment meetings, prioritization debates, and reactive file swaps just to keep things moving. And because the system wasn't continuously validating itself, problems surfaced late instead of early, usually under pressure. So over time, operations relied too heavily on vigilance and heroics. The real problem was that humans were carrying too much responsibility for effective orchestration.
It's so true. Most lenders respond to that pressure by adding AI to existing tasks. You took a different approach. Why wasn't task-level AI enough?
For a long time, the industry responded by adding automation to individual tasks, document collection, pricing, status tracking. Each one solved something real, but tasks aren't workflows. When automation is layered onto a fragmented operating model, it can speed up activity without improving coherence. Sequencing still matters. Judgment still matters. Someone still has to decide what comes next, reconcile inconsistencies, and move the file forward. So even with better tools, the same friction remained. Sometimes faster, sometimes louder. That's when it became clear. If the workflow doesn't change, the outcome doesn't change.
So even with better tools, the same bottlenecks remain. They were just moving faster. Let's make this very tangible for listeners. If intelligence is embedded into the workflow, what would someone actually experience differently as a loan is moving through the system?
Well, the difference is that work becomes coherent from the start. At application, the system dynamically asks only what's relevant based on prior inputs, employment type, property type, transaction type. It collects only the necessary documentation and then actually uses what's provided to calculate and validate information instead of asking the borrowers for it. From there, it supports the loan officer by helping create the file, helping pull credit, pricing, optimizing the structure, and submitting it forward with context intact. Then as the loan moves through fulfillment, processing, underwriting, closing, validation doesn't wait in line. Conditions are created, surfaced, and cleared as information comes available, rather than bundled and delayed. Milestones are monitored continuously. Tasks are assigned with role clarity. Timelines are coordinated without someone manually chasing them. So that means issues surface earlier, next steps are visible without being tracked down, and decisions happen with more certainty. The system is continuously evaluating what's there, what's missing, and what should happen next.
So instead of humans reacting to the problems, the system is preventing many of them from ever forming. So let's talk about the human side inside the company. What changes for operations team when intelligence is running in the background like this?
For operations teams, the shift is fundamental. Instead of managing inboxes, memory, and handoffs, They're working within a system that carries continuity for them. There's earlier clarity, fewer surprises, less rework caused by late discovery. Their teams can focus on guiding files forward and applying judgment where it matters rather than constantly reacting to friction. So operations moves from chasing to guiding.
So what does this reveal about the difference between patching an old model and actually building a new one?
Well, for years, the industry tried to patch an operating model that was designed for a different era. Those patches made individuals also increased fragmentation and complexity. Rebuilding requires redesigning how workflows end to end, not just optimizing tasks. Other industries have already gone through this shift by treating intelligence as infrastructure rather than an add-on. Mortgage is now at that point. The distinction is simple. Patching keeps intelligence external, rebuilding relocates that intelligence into the system. So when that happens, roles change, responsibility changes, and work becomes more predictable and resilient. Rebuilding isn't about doing the same work faster. It's about redesigning how work gets done.
Whoa, that's such a strong statement. Celebrate. Can we put confetti around that? Ooh. So what stands out to me here is that none of this starts with technology. It starts with deciding where intelligence belongs. In the next episode, we're going to go back and look at human side of this shift. What happens to loan officers when busy work disappears and judgment becomes the center role.